Welcome back to Pro News Weekly. There's a lot to unpack from this week's market action.
The US dollar has been on a roller coaster, and the stock indices are back to the taco trade. Gold has been rattled by geopolitics, and Bitcoin is finally stabilizing.
Plenty to get through. Let's start with the dollar.
So the dollar really was on a roller coaster, and it all traces back to renewed conflict in the Middle East. At first, investors piled into the greenback as Brent crude jumped after Donald Trump announced the end of the Iran ceasefire. But then, shortly after, he said Tehran was apparently looking for a chance to negotiate. Investors have seen this play out many times before, so they went straight back to buying Euro USD as part of the taco trade. That's the idea that Trump always chickens out.
So, where does that leave the Fed in all this?
Pushed into the background, really. Geopolitics has crowded out the inflation worries for now. And here's the interesting part. Even a higher chance of a federal funds rate hike wasn't enough to lift the dollar, and neither was the rally in Treasury yields that came with it.
On to equities, and it's the same theme. U.S. stock indices clawed back most of their losses thanks to that Trump always chickens out trade. At the same time, the rotation away from technology names and into cyclical sectors continues. That's bringing down the Magnificent Seven's valuations, and it's actually starting to make them look a bit more attractive.
And there's a number here that really stands out, doesn't it?
It's a striking one. In less than 2 months, NVIDIA has shed $1 trillion in market value, and its forward price to earnings ratio has fallen to 18. For context, that ratio for the S&P 500 is around 20, and for the NASDAQ 100, it's 23. The last time the world's largest company was this cheap was back in 2019, long before the AI boom.
Let's move on to gold, and this one has been under pressure. The escalation in the Middle East sent gold lower for 3 days in a row. The bears are betting that the oil rally keeps inflation elevated and forces the Fed to hold or even increase borrowing costs. Gold is very sensitive to US Treasury yields, and with 10-year yields climbing to their highest since May, that's causing some concern.
And yet, the fundamentals here are still strong. Central banks bought 41 tons of gold bars in May, the highest figure for the spring. The People's Bank of China kept buying in June for the 20th month in a row. This time, reserves rose by 15 tons, its strongest purchase so far this year. Over to Bitcoin, which is finally finding its feet. It's stabilizing above 60,000 amid rumors that token sales by its biggest buyer, Strategy, are being absorbed by other holders. Over the past 3 days, exchange-traded fund holdings have risen by $500 million. After an outflow of $4.5 billion at the end of June, the worst result since these funds launched, that's welcome news for Bitcoin.
And there's data backing up that demand, right?
There is. According to Glassnode, long-term Bitcoin holders picked up 31,800 tokens in the week up to the 6th of July. That demand from other participants helps explain why the market barely reacted to Strategy's announcement that it was selling $216 million in digital assets. So what's the big one to watch this week?
The key event is the US consumer price data. With the labor market steadier, the Fed can turn its attention back to inflation. Its rate decisions really hinge on the CPI trends. The higher those readings go, the greater the odds of monetary tightening, and that would support the dollar.
Anything else on the radar?
Plenty. Investors will be watching the Bank of Canada's decision, US retail sales, and the Producer Price Index and import prices. There's also a run of speeches from FOMC officials.
That's it for this episode. Stay on top of global market moves with Pro News Weekly.
Like, share, and subscribe. We'll see you next week.